If your mortgage renews in 2026, you're among 1.1 million Canadians in the same boat. Most just sign their bank's offer and end up overpaying without knowing it. Let's talk about where rates are headed, fixed versus variable, and how to get the best deal. As of April 29, 2026, the Bank of Canada's rate is steady at 2.25%, unchanged since October 2025. The bank cut rates 7 times from a high of 5%, but warns future moves could go up or down. U.S. tariffs slow our economy, pushing rates down, while rising oil prices push inflation up. Canada's major banks mostly forecast rates near 2.25% through 2026, but hikes may come in 2027. Scotiabank expects up to 3 hikes by year end, the most aggressive outlook. Now, fixed versus variable. Fixed locks your payment for the term, giving peace of mind. Variable rates move with the prime rate, cheaper now but can rise if rates increase. Think of fixed as a seatbelt and variable as a surfboard. Steady versus riding the waves. Right now, brokers offer 5-year fixed rates around 3.94% to 4.04%. Variable around 3.30% to 3.35%. Big banks post higher fixed rates between 4.29% and 4.51%, so brokers can save you thousands. Choose fixed if you want predictable payments and can't handle surprises in your budget. Breaking fixed early triggers costly IRD penalties, so it's less flexible if you move soon. Variable suits those with financial flexibility, costing 0.5% to 0.7% less today. Most lenders let you convert variable to fixed anytime without penalties, a big plus. Breaking variable early costs only 3 months interest. Far cheaper than fixed penalties. Variable allows up to 20% lump sum prepayment yearly. Fixed often limits to 10 to 15%. Tip 1. Always shop around and get written. Offers from multiple lenders before renewing. Tip 2. Bring other offers to your bank and ask them to match or beat them. Shopping around typically saves 30 plus basis points, which can mean thousands over your term. Major banks now offer cashback to switch up to $5,500 at CIBC and $5,100 at TD. These cashback deals can add significant value but vary by mortgage size and lender. Your action plan. Start shopping 120 days before renewal and lock in a rate early. Get quotes from 2 to 3 lenders or a mortgage broker and ask about cashback promotions. Bring the best written offer to your bank and ask them to match it before signing anything. Finally, pick fixed or variable based on your budget, plans, and comfort with risk. Remember, 1.1 million Canadians renew in 2026. The smartest act early and shop around. You have more power than your bank wants you to know. Use it wisely. Like, subscribe, and share this video with someone renewing their mortgage soon.